everybody who has joined the call. Please just confirm you can hear me. If you can, just okay,
Yes.
great. Thank you very much. Okay, so like I mentioned, this is the 7 or 8 actionable income stream series. We've put together this series as a team. There are a few experts on the call. I think you can see all the experts, their videos on. We'll do introductions at an appropriate time during this call. Basically, I would like to run us through the overview of what to expect in this masterclass. So the first thing is why multiple streams of income, and then we'll have a financial market overview. We'll talk about some fundamentals and technical analysis. So we'll try and make this not too high-pitched, if you understand what I mean. We'll bring it down so that everybody can pretty much pick up something from it. And then we'll go straight into how to earn in the Nigerian stock market. The next thing we'll touch on is the mutual funds. And then finally, we'll be touching on treasury bills, government bonds, and corporate bonds. Now, we've chosen these 3 asset classes because we think they are classes where we can immediately get into them if you're interested. And you can begin to earn an income stream from those asset classes literally by Monday if you want to start. Our goal here is to bring out actionable steps that you can take to begin to earn additional income if you so desire. Okay? So then we'll take question and answers at the end of it all. So, who am I? My name is Swanu Money. I am the founder of New Kings Community, and my philosophy of life stems from the belief that every single individual has a purpose, and we all have what it takes to dominate a niche on this planet. So this has led me to create the New Kings community where like-minded individuals have joined. We are about 160 of us currently, and we're all pursuing our different niches and trying to dominate that niche. And so we've come together, and the reason we're doing that is because to dominate, if you've ever studied domination in the positive sense, you find out that it has to do with 3 things, really: people, systems, and then wealth. And as you can see on my chart, the global distribution of wealth is very skewed. Green is Africa. And you can see we're almost non-existent when it comes to the higher denominations of wealth. So from 100K to $1 million a year, we're like 1% of the world. And same over 1 million. A lot of Africans are struggling between the $10,000 to $100,000 level. And without having financial backing, there's no way you can make any headway when it comes to taking your place in the world. And so part of what we're doing here is to help individuals to develop themselves and develop their finances such that they can begin to, take authority and ownership in their respective niches in the world. Okay? So what is the biggest problem that we have in Africa generally? It's just we either don't know or we don't understand. That's just the truth. Those 2 things. We don't know what is happening and we don't understand what is happening, and we're just going with the flow. So a wise man, King Solomon, said, we need to invest in 7 or 8 ventures because we don't know what disasters may come upon the earth. And that's so true. All of us on this call, we went through COVID-19 at some point, and we saw how quickly the world can just change. And for those of us who were not lucky enough to have a company pay them regardless of whether they went to work or not. You saw how difficult it was. I mean, if it didn't happen to you, it happened to somebody that you know. And it was for 2 years, people were in dire straits. So you can now see that this wisdom from Solomon is very, very, very important. If you had 7 or 8 streams of income, it wouldn't matter if one of them wasn't producing or 2 weren't producing at a time. Okay? So basically, like I said, part of the New Kings organization this year, we've decided to put out this masterclass series, and we're going to be touching on 7 or 8 different areas. So today is the first one, financial markets. In March, we're going to touch on real estate. April, crypto and commodities. May, intellectual property. And then we'll do one for creatives, and then another one for entrepreneurs. And then those who are career types, 9 to 5 career people, and then professional service providers. So between now, February and September, we'll have one session every month to deal with those areas. And then hopefully we can help as many people as join pick up 1 or 2 things with regards to additional income streams, and hopefully they're practicable enough for you to apply immediately. Okay, so that's a bit about me and what we're doing and why we're here. So we're going to go straight into introductions for the experts for this session. So we'll start off with Olumide. Olumide, please, if you can unmute and just give us a short introduction, background. Thank you.
All right. Good evening, everyone. My name is Olumide. I have a background in information systems. Currently working in the financial sector as a banker in the banking industry, and I've always had a flair for investing in stocks, which I've built over the last probably 2 decades or thereabout. Thank you.
Thank you very much, Olumide. Okay, we have AY. Ayo, go ahead.
Yeah, good evening, everyone. My name is Ayokunle Tedunjaye. I'm a civil structural engineer. I'm one of the IOCs in Nigeria with 17 years experience. I have interest in technical analysis. I'm a CFD trader with over 5 years in that space. And I have been deploying the technical skills from CFD into stocks with a good return on investment. So, and I believe sharing that interest or that discovery with the team will help us take better decisions. Thank you.
Thank you very much, AY. Okay, we have Victor. Victor, go ahead, please.
All right. Good evening, everyone. My name is Victor. I'm a wells engineer. I do have a background in petrochemical engineering and over 10 years experience in the energy industry. I am also very passionate about the financial markets with key focus around equities, mutual funds, and digital assets. So thank you.
Thank you very much. Next, we have Solomon. Please go ahead.
Good evening, everyone. My name is Solomon Ojo. I'm a certified project management professional.
Did you hear me?
First degree in computer science, second degree in managerial psychology. I started stocks and investment about 24 years ago, and I've fallen, I've risen, but summarily, I'm better off for it. Thank you.
Thank you very much. So the next voice you're going to hear is Olumide, who will take us through fundamental analysis and how to go about stocks. So Olumide, the floor is yours. Thank you.
All right. Good evening, everyone, and trust you can all hear me. You could just signify by a show of hands or a thumbs up. All right, great, fantastic. So I'm just going to give a brief overview of the financial market, looking at it from the global perspective. The first image there speaks to the U.S. asset market, speaking to the size in terms of the equities markets, treasury bills, and other instruments people typically invest in. And we can see that it's quite significant if you look at the next image on the screen that shows you the ranking of the US market and the global stock market. So you will see that most of the companies within the US market are actually bigger than most of the entire equities market in some countries, both across Europe and other parts of the world. And coming back to Nigeria, you see the indexes there in terms of the FMDQ, the NASD, and obviously the NGX. And you would also see that if you sum up these figures together and you compare it vis-a-vis the equities markets in the US, you see that this is less than 0.15. So it shows that there's a lot of opportunities here in the Nigerian market in terms of growth. Next slide. All right. So I know many of us, for those of us who've been conversant, who typically listen to the news from time to time, you hear things about, the bears, the bulls, the whales, and things like that. So this is just the first image that just speaks to, that aspect of things. And one key thing before you go into any form of investment is that you need to understand your risk profile as a person. I need to understand the risk in investments that you're engaging yourself in. It's not always about emotions. It's not always about, I know the MD or he's my friend or we're childhood friends. No, it goes a whole lot beyond that. And we'll delve into that as we go on in the presentation. Next slide. Okay. So basically, I'm just going to be giving an overview. This is something that people typically take probably a year or so to learn. But I'm going to break this down for you in about 10 minutes to give you the basic key things you need to know before you go into venturing into any investment in the stock market, and the basic things you need to understand. Just to make this a bit interactive. Anybody on the call willing to speak to what they understand by shares or dividends very briefly? Fastest fingers. I see someone smiling. There might be a prize. Anybody on the call? Any other participants? Fastest fingers, or nobody wants to speak, or nobody can hear me?
I can hear you. They are shy. Go ahead, Olumide. I think they are shy. Okay.
Okay, I have a hand.
Yes,
okay.
There's a hand. Go ahead.
Go ahead, please.
Hi, can you hear me?
Yes, we can.
Yes, we can.
Okay, so shares, to my understanding, are minute units of an existing business or company on the stock market of a particular country or region, while dividends are like the profits you get from owning shares or stocks of those businesses.
Fantastic. Well said. We'll reach out to you after this class.
Thank you.
All right, then. Thank you. So without further ado, sorry, Esther, do you mind muting your mic if you don't mind? Okay, thank you. All right. So basically, we're looking at the Nigerian. A lot of interruptions. But don't worry.
Okay, please, if you're not speaking, kindly mute yourself. If you join the call, just mute. Thank you. So we don't distract the speaker. Thank you very much. Olumide, go ahead. I'll try and do it in the background as well. Go ahead.
All right, thank you. So basically, we're looking at the Nigerian stock market, and we're looking at, what we need to do, what we need to understand before investing in the Nigerian stock market. So basically, when you're buying into shares, just like it was mentioned earlier, you're basically buying units into a company. So basically, you're a shareholder in that company. So if you have shares in Zenith Bank or GTB or Julius Berger or Wando or the likes, you're basically a part owner of that company, more or less. And dividends are typically paid for most companies twice in a year. You have the interim dividend and you have the final dividend. But that is all based on the profitability of the company and how the company is doing financially in that aspect. So the next thing is that people need to understand is that over the years, we realized that investing in the Nigerian stock market is one of the key ways to mitigate changes or variations in terms of inflation. So in terms of capital gains and things like that, the market always has a way of always moving along with the trend of the general economy at that point in time. So if the economy is a little bit on the low, the market might feel the effect a bit. And most times in terms of capital gains, it's one of the surest instruments in terms of getting decent return in terms of capital gains on your investments. So now the next thing is, what do I look out for when I want to buy shares? One, you need to understand what you're buying. So are you buying a dead company, or are you buying a company that is doing financially well? And I know that people always say that, stocks are a bit complex, you have to understand, but there are just very key things you need to look out for. One, is the company posting profit? Two, is the company paying dividends? Three, are the companies filing their financial returns with the Security and Exchange, with the Stock Exchange and the Security and Exchange Commission? What is their management structure? Is the management team of that company, are they of questionable character? So for instance, if you have the MD or the chairman of a board of a company who's been involved in many fraudulent activities or or is of questionable character, you know that somehow, some way, that is going to over time affect, you know, those companies. So those are some of the key things that you need to look out for. You also need to look at, in terms of basic things like, oh, if you look at the company's financials, and I know many of us may not be into financials, or we may say, oh, we're not numbers people, but most of the times when financials for companies are released, most investment houses would send you like a snapshot that gives you a breakdown of the company's, of a summary of the company's financials. You look at the asset base, you look at their liabilities. Are the company's assets larger than their liabilities? Are they able to meet up with their short-term payments or long-term repayments? You can easily see those things by looking at that snapshot. So for a company whose liabilities are maybe at, let's say, the 1 billion mark, and you see that their assets are probably at the 400 million or 200 million mark, you know that there's an issue there. It could be an issue of maybe exchange rate variation or some financial challenge that they may have had at the time. But it's a cause of concern for you to actually go in to understand why that has happened before you actually invest in those. So that is you doing your due diligence. The math must always math. And people must always have this in mind. A company can be said to be doing fantastically well, but if the math isn't adding up, you have to be cautious before going doing those. When to buy stocks, it's always good to buy when the prices are low. Most people always tend to go, I know back in 2008, before the crisis, a lot of people will say, oh, Owando is going up, Owando is going up. Let's buy. But typically, you should actually make an investment in a company when the share price is low, so that when the company actually does well or the share price goes up, you tend to get two returns. One is the capital gain from the stock price going up. Two is the dividends that the company will pay out in terms of profit to its shareholders, which you are part of. So those are the key things to look at. So towards the end of the year, stock prices typically start going up a bit because it's the end of the financial year. As the companies start releasing their quarterly results on their performance, people start taking interest in buying those stocks. Also, at the beginning of the year, just before the results are released, typically between probably February to about March, April, you start seeing that stock prices start going up a little bit because people are trying to take advantage of the returns that people are going to get in terms of dividends. So I'll just move on to the next slide. So I just give you a little rundown. So this, for instance, shows the top performing stocks in Nigeria in 2024, right? In terms of year-to-date growth in the share price, that's on the capital gain. Now you see a whole laundry list of customers on this list, about 10, yeah. But for me, as an investor, I wouldn't buy shares in probably 70% of these companies. Not because the performance isn't good, but because I need to understand what the financials behind this growth are. So for instance, I will look at, and this is not demarketing to any company. So I'll look at, let's say, a company like maybe Suno Assurance or so. Yes, they may have had a decent financial year, but I know that a 877% growth and the stock price at 10 naira 75 kobo will most likely be the highest peak that this stock price has probably done in the last maybe 3, 4, 5 years, because I've been monitoring the stock. So I know that this is most likely like the peak. This could be a case of the markets trying to regulate itself back in line with inflation and things like that. So I need to be on the watch out for that. I look at a company like Owando, for instance. I know that Owando had a bit of back and forth in terms of its financials, issues with the Securities and Exchange Commission, with some of their investors and things like that. But we know that they've had a bit of a rebound. They've gotten some new oil mining licenses. The company seems to be on the right trajectory to perform well. So I could consider such. I look at the likes of, corn oil. I look at the likes of Tantalizer, RT Bisco. I'm a bit skeptical about them. I look at Julius Berger. Yes, they've done financially well in the past, but I know that of late, they haven't been getting so many government contracts. So that I need to be a bit careful on to see, okay, what else is this company doing in the near future in terms of new investments, new projects they are working on that will keep the cash flow running and would also ensure that the company keeps paying dividends and also posting profits. So those are the key things to look out for. Next slide. All right, so this then shows the 10 top paying stocks in terms of dividends for the 2023 financial year, right? So we'll see a company called Smart Products Nigeria PLC. When I was doing this review, I hadn't heard of them before, in all fairness. And I said to myself, wow, 40% return, that's huge. But I said to myself, how much did they actually pay in dividends? That was basically less than 10 kobo. So I'm saying to myself, what's their stock price today? What has been their historical performance? And what would the most likely return be if I invest in this company right now? Now, my colleague on the call, Ayo, who had introduced himself earlier, is going to give you a bit of a technical analysis as to what you need to look out for, how you can monitor when to go in and when not to go in, looking at the charts and things like that. But looking at many of these other companies, I most likely will buy stocks in a whole lot, in more companies on this list than in the previous list. Why? Because a number of them have a proven track record of paying dividends. I'll give a typical example. 10, 15 years ago, First Bank was the lead bank in the banking sector in terms of dividend payments. They always had the highest paying dividends and things like that. They had a bit of a crisis at some point, which they have come out of, and they've been able to, address that. And the company is doing much better than it was then. But guess what? Other banks started coming up. You had the likes of Zenith Bank, you had the likes of GT Bank, had likes of Access Bank, and Zenith also just come on board. And they then started leading the market in terms of dividend payouts. And First Bank, who was one of the first banks then to pay 1 naira per share in terms of dividends, this was back before the crisis, was now struggling to pay 10 kobo or 20 kobo. So things always change, and you always have to keep yourself abreast with information happening in the market. So I know many of us are going to sign up to different stockbroking companies after this class. Most likely, I'll still speak to that later on. But I would advise that you always keep yourself abreast with whatever is happening on the respective companies you're investing in. Always keep yourself in tune with the trends. Always sign up to the various investment houses to get their reports, market analysis, and then see how they grow. I'll just quickly move on to the next slide. Okay, so this is a table from 2021, which I had pulled out from FSDH. They used to do this very detailed analysis on stocks. So I will just give a quick run through. Don't look at it as being too complex. One stock is in yellow, one is in green, one is in red. So I'll start with the red. Looking at the company in red, that's Cadbury Nigeria PLC. First column shows the previous close price, today's opening price as at that day, the low, the high, how well it did that particular day. But if you start going towards the end, you will see where you have the EPS and PE ratio. The EPS simply is speaking to how much they paid out in dividends. The PE ratio is speaking to the number of years that will be required for you to be able to get a return on your full capital invested in this company. So if you buy 1,000 units, right, of this company, the number of years based on their performance and the dividend payouts and the fluctuation in the pricing, it will take you close to about 88 years for you to get a return on your capital. So you know that is a red flag. And that is a source of concern for you to actually dig deep and see what's happening there. You see the likes of Access Bank, you see that you're looking at probably doing about 2.5 years thereabouts in terms of when you will most likely get your return. So you need to always look out for these things. You can check this out on the FSDH website. Look out for what the PE ratio is saying. Look out for their last financial year where you have the last FY to show when was the last time they filed their financial filings with the regulators. You need to look out for these very key things when you want to do any investment. I would leave this here for now, and I would just hand over to my colleague Ayokunle. I will come back to then tell you a few things you will need to do when you want to kickstart buying stocks on the stock exchange. Thank you very much.
Thank you very much, Olumide. And please confirm you can hear me.
Yes.
Okay, thank you. Okay, so in this session, we'll be talking about technical analysis. What is technical analysis? This is studying the price graph and few indicators. I must stress the word few indicators because there are many indicators that can be deployed to analyze stocks and other financial markets. However, for us, within these few minutes, all we just need is 1 or 2 indicators. Technical analysis is basically based on the price history, that is the historical data of the assets that you are looking at. It does not include studying balance sheet like my good friend, the fundamental analyst, Olumide, have mentioned. However, when you have the knowledge of the fundamental, technical analysis will just help you to refine the decision and to know the exact time to enter and the exact time to likely exit your investment in a particular asset. Okay, it is generally believed that human behavior, investors' behavior, follow a psychological order, which we were introduced to in our basic economics, which is the law of demand and supply, and that applies to investors. The way investors tend to behave around the price of an asset that you can see in history can inform you what they might likely do, right, at the present, and what they may do even in the future, and can guide you to know when to take that, to take a better decision. Now, there are many things we can talk on technical analysis. This technical analysis can actually take months of study, right, if we were to go into details. However, for this masterclass, in just 10 minutes, I want to introduce you to 4 things that you just need to make your decision better in the stock market. One of it is support and resistance. For some of us who are used to other financial markets like cryptos, forex, that is the CFD and others, you may have heard about it. But if you are just hearing it for the first time, don't worry, I will try and explain. Support is like the floor on which you stand, right? While resistance is like the ceiling above your head. Support is a price zone in the past, right, where investors of that particular asset, so you must be considering a particular asset as at that time. So that asset in the history, the zone, the price zone where investors think that asset is cheap to invest in, and they buy massively. They bought massively in the past. And if you see that has happened like twice, like in the graph you can see on the chart is the history of GITCO, that is a Guaranteed Trust Bank. You will see that around 15 naira per shares, around in 2016, thereabout, there was massive buy. And also in 2020, there was also massive buy around that zone. Once you have seen that happen like twice, you can then draw a line for that particular asset. You keep watching. When that asset value drops to that zone, is a good point for you to buy, which happened in 2023. So you have the understanding of technical analysis. You will have joined the group to make good profit within 2023. Now, resistance level, which I say is like the ceiling, is the price of that asset, which investors think it's a good price for them to take their profits, right? They have bought it at a lower price, like Olumide said, and then you want to know at what point can I sell this asset. The best point is to look at your graph, the history of that asset, and see where investors in the past have taken their profit. And it can be obvious, just like you see for GITCO, is around 53 naira. And if you have bought it around that 15 naira, as soon as it's getting close to 53 naira, if you are not there for dividend, right? Because if you are there for dividend, it does not really matter what the price is. You want to be part of the ownership of that company. So you stay. But if you are there for capital gain, it is a good point for you to sell the resistance level. Next slide. Secondly, we'll be talking about chart pattern, right? In technical analysis, there are over 100 chart patterns that you can use to take decision. But for this masterclass, I just want us to know 2. If you know these 2, it will guide you to take your decision. It will help you to know when to enter and when to exit. The first one is the M pattern. So if you are able to get the history of that asset you are interested in, and you're able to see something like an M pattern that you can see on this chart, what is it like? It's like a double top. Some people call it double top. It's an M pattern. An asset value is increasing. All of a sudden, you see that some people sold out on their asset and the price dipped. And you still observe that market forces push it back upward. And as soon as it reached the initial price where the first sellout happened, more sellouts happen around that point, forming like an M. It is telling you something. A technical analyst may not know why, but the Olumides and those that have information about the fundamental, they may have seen an issue behind the company and they are selling. But as soon as you see an M as a technical analyst, it's a hint for you to know that this asset might likely be in trouble. You want to find out, you want to ask questions, but if you cannot even get people to tell you what is going on as technical analysts, as soon as they break what we call the neckline, that price go below that neckline, my brother and sister, please jump ship if you are not there for dividends. You will see many people when you talk about investing in stock, they say they've gotten their hand bonds. That's pre-2008. I had to go get data, what really happened pre-2008. And you see that most assets, before they crash, they show patterns, the M patterns. They show different patterns that tells those that are well-informed in technical analysis to jump ship. and save their investment. But if you don't have this knowledge, you will just be hoping that the shares price will go up, and it will not. Probably it will not. So this pattern can help you take informed decision to know when to sell an asset, right? Double bottom is the opposite of the double top, which is like W. If you see an asset that is going down, not value, like my colleague said, you want to buy an asset when the price is really low, okay? But it might be low for many years to come, right? But when you observe that this asset that is low, you just suddenly see a sudden buy on it, the price goes up, and then some people will think, it's like this is a good time for me to escape this now. So they will sell their asset again. And you observe that when the price went low again towards the initial low where the initial buy happened, you now see a stronger buy from that same point, forming a W pattern. You can see it in the second graph, forming a W pattern. As soon as it jump above what we call the neckline, as you can see, that price, you can join safely, because some people who knows the history of that company, they may have heard that the company, they now have new contract, new management. You don't know, but as a technical analyst, you can see it on your graph. The graph speaks for itself. So you can then know when to join. Next slide. Only on the things that I want us to take from this masterclass is what we call the dynamic support. Dynamic support is the use of the moving average, whether it's a simple moving average or the exponential moving average. Once you add it to your chart, it will tell you the average value of that asset, right? If you look at the example on the graph now, or on the slide now, is Julius Berger. Early 2024 is around 43 naira, and it's above the average moving average. Once it's above it, you can take a good buy on it. It means the value of the asset is a little above the average opinion about it. But when an asset price is now far away, like it is around December, is far away from the moving average, that is not when to join it. A lot of people are saying, Presco did very fantastic last year, let me go and buy it. And a lot of those assets that did well last year, they are far away from their moving average. That is not the time to join it, because it's like an elastic rubber. As soon as it goes further away from the moving average, it means it is overpriced, and the price might soon come down. If you are interested in that company, you want to be part of the ownership of that company, you want to wait a bit for the price of that asset to pull back, to reduce towards the moving average. And as soon as it gets close to the moving average, you can then join and be part of the ownership, and it will be a good price for you to join. That is the importance of the dynamic support. Lastly is what we call the trend line. Trend line is like drawing graph in secondary school. When you see an asset graph or an asset, and the graph is going up, it's making higher high in the language of the technical people, but you don't want to worry about it. All you can see that it is going up. You want to look at two corners, you draw a straight line. As soon as you just draw a straight line to join 2 points, draw a straight line to join 2 points, form like a channel. As you can see, the last graph you are seeing there is for Zenith Bank. And this was what I used in 2022 around December to enter into Zenith Bank. So, and it was going down on the channel. You see that it is going towards the lower end of the price. As soon as price broke out from the channel, you know that it is about to change trend. That is why they call it trend line. We didn't know why it was changing trend anyway. The fundamental people we know, but as a technical person, you have seen that the price has changed for whatever reason. You then want to find out. You want to ask the people that knows more about it, or you want to talk in the group and ask people what's going on here. And if you get the confirmation, you can safely join. I joined at 20 naira. Currently, Zenith is about 50 naira or so thereabouts as at Friday. So trend line can help you to know that things are changing on the assets that you are interested in. So with these 4 key section of the technical analysis, if you have it handy, it will help you to take a better decision. So you might be asking yourself, okay, where do I get the data or the graph of stock market, especially Nigerian stock market? We have included that in the slide. You can go to www.tradingview.com. You can also check on the armybroker.com page, and lastly, the investing.com page. And as soon as you get there, just type the asset you are interested in or the company you want to buy into. Just check what you can see, what is the support point, the resistance point. Are you seeing an M pattern? Are you seeing a W pattern? Some people invested in Julius Berger, I must say, and early last year at 43 Naira or 40 Naira, so to say, and they had over 200% profit. But by December, an M pattern is already showing on Julius Berger share price. But if you don't know, you don't know. So those who didn't know, and we discussed this in our group, it's also part of the New Kings group, where we discuss financial things, that an M has been formed and this share is going down. We're not demarketing it, right? But we're only giving it as an example here. And currently, and if anyone who knows the M pattern could have sold at 155, it actually got as high as 173. And then you will have made over 200 and 300% thereabout. But at the end of the M, it's like 280. So those doesn't know, the thing went lower to 128 as at Friday, right? And it's still going down, I believe. And we are waiting for it to get a particular point we call the POI. That's the point of interest, around 100 or 105. For those who might be interested, you may want to watch out for that, because JB is a good company. So just to summarize, these are things that I believe if you introduce it into your stock knowledge, will really improve your ability to make profit in this market, and will save you a headache if the market is going on a down turn. Yeah, thank you. I will call back Olumide to come and help us. How do we then buy into Nigerian stock? Thank you.
Okay, thank you so much, Ayo, for your insights. You know, I always like listening to Ayo because he always has a way of giving you the other granulars from a technical perspective. So the next thing now is that now that you want to invest in the stock market, what do you need to do? So basically, you need to sign up with a stockbroking house. And once you sign up with a stockbroking house, basically they handle the rest in terms of setting you up with CSCS and all those other things that are entailed in the whole stockbroking process. What I have done here is that I've done a graph that does show the top 10 stockbroking companies based on market volume or the number of shares that they had sold last year. Now, bear in mind that for a number of these companies, this will have to do with the banks raising capital last year, because the number of banks raised a lot of capital. So these were some of the major stockbroking houses that handle some of those transactions. So that's why you will see some companies doing about 70 billion or thereabout in terms of stocks. So the ones in green are ones that I know that people are that a number of us on the group have used and are fine with. I personally use Morgan Capital. I've used them for years and I haven't had problems with them over the years. They have an online platform, quite seamless and straightforward to use. I've given a breakdown here of the charges. One thing I would advise anyone to do before choosing a stockbroker is to be sure that they're licensed, be sure what the commissions and brokerage fees would be, so that you know what you're getting yourself into. I know for small amounts, it may not seem so significant, but when you start doing major volumes, you start seeing that, the brokerage fees can actually be quite steep if you're paying 1.35 as against a lower fee. The market typically opens between 10 a.m. and closes at about 2:20, 2:30 thereabout. What I would advise anyone to do once you buy any stock is just like when you're buying a house. You have to ensure that you have your deed of assignment, right? Your deed of assignment in this case would be well, no, that wouldn't be your deed of assignment. Sorry, you need to ensure that you set up your e-mandates with the respective registrars of the companies you're investing in. So, for instance, any company you're buying shares with, they have a registrar. That registrar is like, let's say if you live in, let's say the Federal Lands Registry. They have all they are the ones that keep all the records of all the people who have land titles, who have bought houses, who owns what. So each company that you're investing in has a registrar. So you need to ensure that you fill the e-mandates form with each of those registrars and ensure that it is maintained. Secondly, you have to ensure that there's a transferee form which you typically need to fill. Look at it like if you're buying a house or purchasing any assets. If you buy something from supermarkets, you must get a receipt and to show as proof of evidence or that you bought that item. Typically, if you're buying a very large item, maybe a TV or whatever, you want some kind of warranty. So both you and the what do you call it, the person selling the goods to you will sign off on that form. So just take that transfer form to be something of that nature that you need to fill out and ensure that those are properly maintained. One last thing before we go on. So I know we've spoken to the good sides of it, but I also want to let you know that there's a bad side to it. And the bad side is when you do not take informed decisions. So please, as I wrap up now and hand over to my next colleague, I would have always advised, always stay informed and have information. I'm trying to be careful not to speak to something that could be termed insider trading. But if you know people who work in companies or know about certain companies, always find out, oh, this particular company, what do you think about them? How are they doing well? How are they doing financially? Always do your homework. And you can always find these things online. That's the beauty of it. And always have information. Don't go with the trend, because sometimes it could be market manipulators at work. And we've seen that play out many times. So I've gotten my fingers burnt before doing that. And I remember when I was in university, I'm closing with this, and I know my time is almost up. I know at one point in time, I was saving money for my allowance at that time to be buying shares. And during that period, I bought in a lot of companies based on speculations or emotions or people saying, oh, this is going up. And by the time I was done this uni and everything, and I went to start following up, I realized that all those companies I bought shares in, about 65% of them had gone bust. They had either been bought over or whatever. And what was the most annoying part was that I used to starve myself at that point in time to buy those shares. So imagine you've done that kind of investment and you then come out, and the only thing I got was a dividend warrant for 20 cents. So 20 cents at the dollar rate, or maybe 120 or 130 back then, that was literally nothing. So please always ensure you do your homework very well before you do any investment. It's not hard. It's not complex. It's just understanding the financials of that company and make sure that whatever math is mathing. Thank you very much. So this is an example of one of the companies that, Mary Trade, that you can easily just sign up to and do everything from a mobile banking application. There are other players there like Trove, Bamboo, Chaka. I have my concerns with them. I prefer dealing with registered stockbroking firms to avoid issues around, dividend payments, your mandates not being properly maintained, and things like that. So yes, that's it for me. I hope I've been able to pass on some knowledge to you all. And if you have any questions, you can put it in the chat box and we'll take it after the final speaker. Thank you.
Thank you very much, Olumide. So we're going to move straight on to Victor, who will take us through the mutual funds part of this segment. Yeah. Thank you. Victor, go ahead, please.
Good evening, everyone, once more, and thanks to Olumide and Ayo. A lot has been shared tonight within the space of fundamental analysis and technical analysis. At this point, I'll switch over to the world of mutual funds. So what are mutual funds? So simply, mutual funds are basically investment vehicles that allow people who are called investors to pool funds together, yeah? And then these funds are then managed by professional fund managers. They invest these funds into securities, which are basically financial instruments, such as your bonds, stocks, commercial papers, treasury bills, and similar assets. They invest these funds into these securities, and then the profits or gains from these investment is being shared with the people or the investors who contributed this pool of funds. And in terms of sharing the profit, it varies per organization. For some, these funds are shared daily. The profits are shared daily. For others, profits are shared monthly, and for some, profits are shared quarterly. Yep. So I have here different types of mutual funds. You have what's called money market fund, and that actually depends on the type of security where this fund is being invested into. So for your money market fund, basically the funds that have been pooled together by investors are invested into commercial papers and treasury bills, or basically quality short-term securities, which simply means that this kind of assets mature within less than a year, in months to 1 year. And then for For example, your equity funds, for this type of mutual funds, the funds that was pooled together is basically invested into the stocks. And this also, depending on how this fund is being invested, it also affects has impacts on the returns and also the risk. So the same way you have different types of mutual funds, so the risk also varies. For your money market fund, the risk is low. For your equity funds, the risks are higher. So different types of mutual fund, the risk also varies. So here in Nigeria, we have different organizations or financial institutions that offers different types of mutual funds. Here I've listed 4 of them. These 4 I have tried or I have account with, and I've checked them out. I have funds with them. I see the performance, and based on my analysis, based on my review of these 4, personally, I'll classify Stanbic IBTC as the top amongst these 4. And for me, my key reason for that and recommending that is 1, the infrastructure Stanbic IBTC has, the technology, and also the data availability they do have. Secondly, for me, is the customer relations, and then the fund performance you have with Stanbic IBTC. Yep, and then I do have some pros and cons here in regards to your money market fund. So some of the advantages here includes your money market fund enables you to achieve 2 things at the same time. You can save your money and also invest it at the same time. It's different from just having a bank account and keep funds in there. If you have a money market account, you can save in there. And then while you're saving in there, it's also giving you fantastic or moderate returns, I'll call it. Another advantage here is that, yeah, it is a low risk investment. Liquidity here is also high. You can quickly switch your investment into funds and use it to do whatever you need to do. You also have the privilege of tax saving here. If you have a money market fund, you do not have to pay any tax from the returns you get daily or monthly or quarterly. Yep, and then you also have the privilege of having some financial or some professional fund managers manage this fund. Some of the downside to this is that you do not have control of where this fund is being invested to. So once you've put in your fund, the money market managers control where this fund is being invested into. And then key amongst the downside here is that your money market fund is heavily sensitive to interest rates. So depending on how the economy is and depending on how the CBN tries to, let's say, for example, here in Nigeria with the high inflation we do have here, and the central banks are trying to use interest rates to tame inflation, this do have impact on also the returns you get in your money market fund. So just to note that. We can go to the next slide. Next slide, please.
Hello, I'm on the next slide. Can you see it?
No, I can't see it, but okay, I can see it now. Okay. So on this slide, I've just presented the various types of mutual funds, which Stanbic IBTC has. There's about nine of them. Among these 9, I have personally tried out 3 of them, while I've also monitored 1 of it. So the Stanbic IBTC money markets, the Stanbic IBTC dollar fund, and also the Stanbic IBTC guaranteed investment fund. These 3, I have tried them all out, but I still prefer the money market fund currently compared to the other 2. The Stanbic IBTC equity fund, and I know I monitored that one throughout last year, and then that gave a return of about 38.1% last year. Did well, but however, the Stanbic IBTC equity fund is classified high risk. However, the money market fund is low risk, which simply means your capital is guaranteed. Yeah. So that's why I've zoomed into your Stanbic IBTC money market. Your capital here is guaranteed. You can tailor this fund into achieving whatever your objectives are, be it having stable funds, maybe to pay children's school fees. You want to achieve financial freedom. You're targeting it towards achieving a particular asset. You can actually use this fund to close that out. So this fund here are basically invested in high quality short-term assets. And currently, the returns here is about 22.2%. Yep, the minimum you need to start up this account is just 5,000 Naira. Yep, and yeah, it's low risk, as I've said. The expense ratio is about 3.5%. Next slide. Seem to be a lag somewhere.
Hello, I've moved the slide though. I think there's a lapse or a lag somewhere. It's not coming up.
Yeah.
Can
Yeah,
every other
see,
person see it?
Can others see it? I can see it now, but can others see it? I can see it.
Yes,
So
we can.
just go ahead. Okay. Yep. So on this slide, I've tried to carry out performance simulation of the Stanbic IBTC fund. Just to note, this fund, this simulation didn't include the compounding effect of this fund. It just kept it simple. So if one has or open up this account with just 5,000 Naira, which is the minimum required to open the account, on a daily, based on the current interest rate, what your returns should be around 3 Naira per day. And in a month, about 91 Naira, while at the end of the year, about 8,100 Naira. If you do, let's say, 1,000,000 Naira here, that simply means in a day, you should be earning about 600 Naira. Yep, and in a month, about 18K. At the end of the year, you should have 220,000 Naira here. And for the bigger guys, if you have, let's say, 100 million in here, in a day, what you should expect to be within the range of 60K and above. Yeah. And on monthly, within 1.8 million and above. And then in a yearly, over 22 million Naira returns. And this with you doing nothing, just monitor your account. And that's it. Yep. And then I've tried to do small analysis here between investing in dollar or investing in Naira. With the current situation of Nigeria, if you have dollar and you're struggling, should I convert this dollar to Naira or should I just invest dollar? My analysis shows that if you convert that 10K to Naira using the current rate, which is somewhere below 1,005. Now, when I did this, it was about 1,550. If you convert that to Naira, you get about 15M and above. If you invest that with the current rate in the money market, you have about 3.4M as returns in terms of Naira. However, if you do that in the dollar market fund, what your returns would be, the returns there is about 6.8% per annum. So at the end of the year, what you should expect there is about $685. However, if you have that in Naira, you have about 3.4 million at 22% returns. If you convert that to dollar, that gives you within $2,000 and above, which is definitely higher than what you get if you had invested that fund in the dollar fund. So for me, personally, I go the Naira route and then use the proceeds to convert the proceeds back into dollar and fund my dollar account. So here I have some actionable steps. Anyone who is interested to kickstart this account, it's simple. You can quickly, either you walk into any Stanbic IBTC bank around or online, download the form, fill the form, and then submit and get your account opened. And then after that, also ensure you set up your internet platform and your mobile app platform also. They do have a wonderful internet and mobile platform, which keeps you updated on the go. Yep, and then after that, all you need to do is to fund your account and monitor your daily returns, basically. Yep, and then key things to note here is that when funding this account, ensure in the narration, you have the narration to be the account number of your money market account. So when this account is open for you, you're given an account number. So your narration should be this account number, and in bracket, you can just have your name there so that the fund can be traced to you, because it's basically you paying this fund into a pool of funds. So it makes things easier that way. And then that's one. And then in terms of time, if you have funds to invest, the time you pay in this money also matters. If you pay in this money before 12 noon, yep, that money reflects in your account that same day and also works for you that day. So you get returns of that fund that day. However, if you pay in this money after 12, so in the afternoon, it will reflect the next day and it will work the next day, not that same day. Same applies to redeeming. If you tend to withdraw some funds out of your account, if you do it before noon, most times you get it the same day. However, if you do it in the afternoon or in the afternoon, you get it within 48 hours the next day, basically. Yeah, and then your money market fund pays you every day. That includes public holidays and weekends. So 365 days a year, you get paid. All right, so before we leave this slide, I have a favorite quote from Warren Buffett, which says that if you don't find a way to make money work for you while you sleep, then that simply means you have to be prepared to work until the day you leave this world. And I don't think that's a fantastic idea. It's really cool and perfect to have funds working for you while you find time to do other important things with your life. Yep, and then lastly, before you go into taking any decision to invest, I would encourage that you do your own personal research also and be convinced about where you're putting your money into. So next slide. Yeah, my last slide has to do with portfolio allocation. I haven't seen it yet. Yeah, portfolio allocations. All right, so this is my last slide, and this has to do with portfolio allocation. Here, I have 3 different model or philosophies in terms of how we manage or allocate our portfolios. So the first one has to do with what's called the 100 minus your age. So this is saying, just assume you be in this world for 100 years. Yeah, 100 years. And then whatever your age is now, if you're in your 30s, take off your 30s from 100. Whatever remains, invest that into high risk investments, things like your stock, digital assets, high risk investment basically, while you invest 30% into low risk investments. Yep. If you're in your 40s and 50s, you do similar things to help you cushion the ups and downs of high risk investment. And then the second philosophy here or model here is by Ray Dalio, which he called all-weather portfolio allocation. So just a quick question. I'd like us to type either a 1 on the chat box if you've heard of Ray Dalio, if you know Ray Dalio, if you've seen any of his works, his books, or his videos on YouTube, or his publications on Twitter. Just type in a 1 for me on the chat box, and if you haven't, just type a 2 for me. So who is Ray Dalio? Before we go into his model, who is he? He's indeed a great guy. He's the founder of the largest hedge funds you have in the world, which is called the Bridgewater Associates. He's been into the business of global macro investment for over 50 years now. And what does that really mean? So he's basically been in the business of helping global high net worth individuals in preserving and multiplying their funds on a yearly basis. Yep. So he's an expert when it comes to the world of investment, and he has advised this all weather portfolio, which simply means that if you have this kind of portfolio, he has advised, depending on what the economic condition is around the world, your portfolio will still be fine. Yeah, your returns will still be okay. So he's saying invest about 40% of your assets or of your funds into long-term government bonds, and then about 30% into stock, and then about 15% into intermediate government bonds, 7.5% into gold, and then 7.5% into commodities. Yep. So if you want to know more about Ray Dalio and his works, I have 2 books here I would love to recommend. One is called Principles by Ray Dalio, and then the next one, which is the most recent book, which he has titled The Changing World Order. He also has a fantastic YouTube videos that can help anyone understand how the economy actually works globally and how the business cycle works. You can also connect with him on X, he's there. And then the last philosophy or model we have here is called the permanent portfolio allocation. So this is keeping it quite simple. It's saying divide your funds into 4 equal parts, 25% each. Invest 1 part into cash, half that as cash. Invest the other one into commodities. Invest the other 25% into stocks, and then have the other one in bonds. But what this is basically doing is keeping 50% of your assets in low risk assets and about 50% in high risk assets. Yep. And this basically helps individuals limit losses during the market downturns. Yep, basically. So for those who want to also know more about portfolio allocation and more around investing, there are also two books down here. One is by Tony Robbins, which is called Money, Master the Game, 7 Simple Steps of Financial Freedom. And then the next one there is The Intelligent Investors. I've gone through these books. They're fantastic books and will really help you a lot in deepening your financial intelligence and help guide you while making investments. So thank you very much. I will hand over to Solomon, who will take us through treasury bills.
Thank you very much, Victor. So the next voice you hear is Mr. Solomon. Solomon, please go ahead. Thank you.
Good evening, everyone. I'll be talking on treasury bill, notes, and bonds. This is basically talking of passive incomes. So to start with, I want to ask, if you get 4 or more credit alert every month, please type 1. I'm talking of regular credit alert. That means that you get average of 1 every week. Please type 1 in the chat box. I can't see any response. Okay, good. Thank you. Okay, I have 12. New message. Okay, thank you very much. You can see that the number compared to we have 100 here, and the number of persons who get more than 4 credit alert is very, very low. So what we're discussing is how to be getting, or the possibility of getting regular credit alert. We're talking of cash flow. So we look at treasury bill, notes, and bonds. What are treasury bills? They're just debt instruments issued by government, and they are short-term instruments. We also have notes, which can be in terms of commercial papers, corporate bonds, and other things. Then we have treasury bonds. All these are instruments that government use or companies use to borrow from the public and giving attractive interest in return. Next slide, please. Okay. Now, when we look at corporate bonds, those are bonds from companies. And if you are going to buy it, I will encourage that you check the rating. What that means is that when they issue a commercial paper, either 6 months or 9 months, they're always short term because the company actually need it for running their day-to-day business. If you have any rating that is not AAA, AAA, I will discourage you from going for it, because what that means is that the companies have the rating is not good enough. Anything below AA is not good enough. And if you buy it, you can actually lose your money. If the company is unable to pay, they can actually convert your bond or your CP, commercial paper, to shares for you, which is not what you plan for. So, but if it's AAA, you are sure that that company is likely to be able to pay you your interest and your capital when it's due. Next slide, please.
Carry on, please.
Okay, now the next one is talking of treasury bill bonds and other instruments. So when we look at, I want to first of all start from treasury bill. This we have 91 days, 182 days, and 365 days. And you can see indicative returns. For treasury bill, we have the stop rate and we also have the yield. Why do we have this difference? The difference is that treasury bill is the only instrument that I am aware of that give you your profit or your interest upfront. So if you are investing money, you can, as you are investing, you are collecting your gain, your profit, your div, your interest. And that makes it a very good instrument. What some good investors do is that when they invest, they collect the interest and you reinvest again. You can now see the effect of compounding. So you have double advantage. You get your interest, so there's a compounding effect on that money. Now, this is issued by government and it's managed by Debt Management Office. If you want to get it, just go to your bank or your broker or asset management companies. I use FSDH for most of my transactions and they are very good. So once you fill the treasury forms, you get it. You can also buy it either from the primary market or from the secondary market. If you want to buy from the primary market, treasury bill comes out twice in a month, every 2 weeks. So you just need to check, and once you get the time, you buy from the primary market. Now, the minimum you see, if you see the advert, it's going to be 50 million. But with 100,000, your bank or your financial institution can buy you treasury bill. Because all they do is to collect funds and bid. Most of us, except for a few persons, we don't have 50 million cash. But once they gather that fund, they invest it for us and we get our return. Thank you. Now, the other two bonds that I want to talk of is federal government bond and federal government savings bond. When you're looking at federal government bonds, minimum is 5 years. It can be 10 years, it can be 20 years, it can be perpetual. The interest or the coupon, what they pay is called coupon, and it is paid twice a year, every 6 months. It is issued by federal government. You can also do it through your bank or through your asset management company. Stanbic IBT is a very good bank when it comes to federal government bonds. I also said that FSDH is also very good. Those two people, I can recommend them because I've tested them. Now, the minimum is also 50 million, but your bank or your financial institution will do it for you with minimum of 100,000. For federal government savings bond, it is also a way of taking loan or borrowing from the public. This is a bit easier than federal government bond. Sorry, we have two now, FGN bond, then we have FGN savings bond. So we need to be able to differentiate between the two. Now, the period for savings bond is either 2 or 3 years, and the return or coupon is paid quarterly, every 3 months. Minimum on the paper is 5,000, but if you are getting 20% of 5,000 divided into 3, I don't know how much 5,000. So it's better you have a minimum of 100,000 so that you can have a reasonable return. Now, when you look at federal government bond, is something that is very good and you can easily build a bond ladder. Okay, I need to also mention that there's another bond which is called Sukuk bond. During the week, I had an interaction with one of my prospective clients who happened to be a Muslim. And he said, no, we don't do anything that has to do with interest. And I told him there's something called Sukuk bond. Sukuk bond is like FGN bond, but the difference is that they don't pay interest, they pay rent. They pay rent. They call their own return rent. And it's also being paid every 6 months. It's also a very good program or bond, but tailored for those people who may say they don't want anything that has to do with interest. Now, we're discussing passive income. When you look at all these instruments and I ask a question. How many of us receive more than 4 credit alerts every month? About 3 years ago, I was discussing with a colleague in the office, and he said, all my money is in a voluntary contribution. You know, we're discussing tax and all those advantages. What he said, he put all his salaries to voluntary. I said, how do you hit? He said, well, he has enough passive income that every month he get at least 6 to 10 credit alerts. How did you do it? Bond ladder. So I want to talk about something we call bond ladder. Bond ladder is a way of spreading your bonds in such a way that every month you get credit alert, you get paid. What do I mean? If you buy, for example, federal government savings bond in January, February, March, let's say you buy 5 million, you will be getting coupon for the next 2 or 3 years, based on your choice. Because don't forget that federal government savings bond pay you coupon every 3 months. So your January savings bond will pay you coupon for April, July, and October. Your February will pay for just like that. The March will pay you for June, September, and December. Now, if you're able to now get like 10, because what people do is that once you start buying, you continue. So when you buy like 6 now, or you are able to, after like 2 or 3 years, you're able to buy up to 10 different, you see that every week coupon will drop. So such a person can even say it's not forced to work. And that's actually where the passive income comes in. Because immediately you have submitted your form and you have found your account, everything is done, the subscription is successful. For the next 3 years or the next 10 years, in the case of FGN bond, you don't do anything. The only thing that happens is you receive your credit alert. Whether you are sleeping, yesterday some people received money. Yes, Friday, they paid FGN bond 2034, 2031, and the FGS2. So this is a very good way of having passive income because you don't have to do anything. Next slide, please. Now, this is the calendar for the bond for the first quarter. These bonds, like I said, is being managed by Debt Management Office. Debt Management Office. So this is the calendar for the quarter, and they always, so if you really want to buy, you just look at the calendar, plan towards it. Federal government savings bond always come up first week of every month, most time, or sometimes there will be changes, but it will be announced. So first week you have savings bond. Second week you have FGN bond, the 6 month own. Then your treasury bill is every 2 weeks. Next slide. Then you can also buy foreign bond. Foreign bond or local bond. And these are just the steps. You can go through Standard Chartered. For people that say, I want to invest in dollar, it's very easy. I also need to mention that Nigeria also have something called Euro bond. So you can also, that's a dollar denominated bond. So if you try Standard Chartered, Stanbic IBTC, they have those packages where you can use your dollar. Next slide, please. These are examples of financial instruments and their returns. We need to know that these are indicative returns. They are not statics. You know, in investment, we always say that the past performance does not guarantee future performance. So, of course, if you look at Treasury bill, this week, the interest has started dropping, and there are speculations that it will drop more because this government is fighting inflation and see how they can bring it down. People who are in manufacturing industry, they are not enjoying the high interest rate. Next slide, please. Now, so those are just for us. Now, generally, looking at investment, Warren Buffett is one major person that we all follow. I want to assume most of us are familiar and we have heard his name before. I don't want to ask us to type one again. Let me just assume that more than 50% of us know who Warren Buffett is. He said there are two major rules or laws, the other rules. The first law is that never lose money. Never lose money. The second one is never forget rule one. And what does that mean? Any investment you are doing, any business you are doing, whatever the returns, make sure your capital is secured. The return of my money is more important than the return on my money. Do we get that? The return of my money, the guarantee that I'll get my money back, my principal is safe, is more important than the interest you are giving me. So it's very important that in this business, we should never lose money. And that's why we have to look at our risk profile and avoid any business that will make you lose money. Now, the other rule, when you are buying stock, Warren Buffett actually is majorly into stocks. He says, if the business does well, the stock eventually do follow. Sometimes we have undervalued stock when you look at fundamentals, and you can see it. You see that, for example, there was a time Senate, even as we speak now, Senate is below GT. But when you look at their paper, they are very close. The wise people look at it and say, look, what's the response for this gap? And they take position. At the time, Okomu Oil used to be ahead of Presco. When people look at their data, they look at their values. I say, no, Presco is undervalued. But today, Presco has overtaken Okomu. What am I trying to say? When you study the business and you see that this is a good business, buy into it. When you buy into it, if the price is low, after some time, the price will go up. So now, Olumide has taught us how to identify value, which is very important. It's very key that we should be able to identify value if you want to do stock. Now, I also suggest that it is better to buy a good company at a good price than buy a bad company at a wonderful price. What does that mean? You think something is cheap. It's just like you want to buy land. You think land is cheap, but you are buying a swamp. But you think you are buying it's cheap now. Maybe other people are paying 20 million. The second one pay 5 million. But because you are in office, you think you are, no. That money that you think you are saving, you will lose it. So always look for a good company to buy. Now, the last rule of Warren Buffett is that when you are buying into share, for example, have the mind to hold forever. Ask yourself, because you are a shareholder means you are a part owner of the company. So you should be ready to hold that company. There's something we call monkey hunting. Let me just round up with this story. Monkey hunting is about, there was a time in a village, there was a man that used to buy monkey from people. And he keep increasing the price. He started by buying it for $100. Later I moved to $150. Later I moved to $200. Later I moved to $500. And people were happy. So all the monkeys got finished. Now you know people buy monkey from other people, other their friends, thinking that this other man will come. So at the time, he now increased to 1,000. Now he kept his own monkey too in the village. He's been buying from them from 100 naira, $100. Now it's 1,000. People went to buy his own monkey for 1,000 because they assume that when next he come, he'll be buying this monkey for 1,500 or 2,000. But behold, after that last time, he went away and didn't come back. So let us avoid monkey hunting in our business. Don't lose money. Any stock you are buying, be ready to hold it forever. Thank you.
Oh, thank you very much, Solomon, for that. Please avoid monkey business.
Exactly.
Well done. So, I think this brings us to the end of our session today. Just as a recap, we looked at stocks, we looked at fundamental analysis, technical analysis, of course, very briefly, and where to buy stocks if you want to do it immediately. We also looked at mutual funds. In fact, I have to say this, whilst we were preparing for this session, and Victor gave his session on mutual funds, immediately, the next day, I dusted up my app and I opened Stanbic and I'm collecting profit. My profit has been dropping for the past 3 days. So this thing is talking about is actually true. So thank you for that, Victor, on mutual funds. And then finally, we heard Mr. Solomon talk about bonds. A lot of people hear about these treasury bills, treasury notes, and they just ignore it. But just like he said, when you ladder your bonds, you can be getting a lot. I mean, that's something I'm going to start doing immediately, because you can imagine the government paying you every week based on how much you put in, and some of them is in perpetuity. So when the Bible says you should lend to nations, please let's start lending to our nation so that we can be collecting money straight away. Thank you so much, gentlemen, for this fantastic expose of the things we can do to begin to earn passive income and maybe multiple streams of income immediately. I'd like to open the floor now for questions. Thank you so much for all of us who have been on the call. I heard that the Zoom, knocked a lot of people off. So I'll probably post this recording in the Prospective and New Kings group, and then we'll work on getting a bigger Zoom class, maybe a webinar version, so that we can take more people for the next class. So please, Al, are you on the call? I know you were helping us with the questions. Can you just help maybe with the first question so that I can field it to the next to the experts that can answer? Thank you very much.
Okay.
Yeah, I already shared the questions with
you sent it.
speakers.
Okay, fantastic. Thank you.
Okay, so good evening, everyone. I think I have the first question here from Akelachi.
Akilachi, go ahead.
Akilachi.
Just answer the question. Leave the name.
Sorry, I just want to be careful that I don't mispronounce anyone's name. All right, can I have 2 brokerage accounts with 2 different stockbrokers? Yes, you can. I think I probably have 2 or 3, but I think it's always easier to manage one. So you just always have like one touch point that you go to, but you can have more than one. I mean, if you've had one that you've had issues with before and you need a new one, please kindly go ahead. There's no issues doing that. Second question, if I don't have time to learn and do fundamental and technical analysis, is it okay to just invest in an ETF like the S&P 500? Yes, you can. Yes, you can. I've actually done that before. Just that sometimes when you sort of manage your own portfolio and do the groundwork in terms of the learning, you're able to make certain returns on it. But that's an option. I think a couple of companies do that. They have, I think, Victor spoke to a few I think Stanbic basically, yeah, and a few others do that or something similar to that. Victor, I'm correct, right? Yes. Okay. Fantastic. All right. Any other question for me? Or I think that was it. Okay. Okay. Wow. This is a lovely long.
You have one more for Stanbic IBTC dollar fund. Can the returns be paid in dollar? Oh, is that for? Okay, sorry, that might have been for Victor.
I think that's for Victor.
That's for me.
Okay.
Yeah, I
so
think
returns paid in dollar.
Yes, I mean, Victor, I believe that's a yes.
Yes, for your Stanbic IBTC dollar fund, your investment is in dollar and your returns is also in dollar also. Yep.
All right, fantastic. Thank you for that.
Okay, great.
Okay, another question for you, Olumide. Does acquiring a company shares give you some form of control over their decisions? What I mean here is, as a shareholder, does it in any form mean you have full rights to cast votes? Except your $10 and co. Well, go ahead, answer for them, please. Go ahead.
Okay, so to be honest with you, that will be your long-term goal, but you have to have a controlling stake in those companies to be able to make those decisions. That's just the reality. You have to probably have like maybe a 5% stake or something like that in the portfolio of things. Then I think there was a first question is, what is the recommended risk level when investing in a company share, especially for a first-time investor? So the way my approach to this is that start small and grow as you learn. So if any stockbroking company you sign up with will give you a list of stocks that they recommend on a weekly basis that you can invest in. What I will advise is that you do your homework on those companies, look at the price points. Don't depending on the funds you have, I would say go for stocks that are not so expensive. I know some people may want to go and start buying into Seplat at 5,000 naira plus, but when you look at your return on investment over a long period of time, you will see that you have to pump in more money to get a decent return in terms of content. So I would say look for good companies that are the prices are marginally average and that you can jump into. I hope I answered that question correctly, and if I didn't, you could just indicate in the chat box. How do you monitor your share growth / fall as a beginner? If you go, the stock market releases reports on a daily basis, whichever stockbroking company you sign up with, you can see they send you emails every other day. You can go to the NGX and check. But just like Ayo had mentioned, if you check on TradingView, you can see what a stock has done in the last 2, 3, 4, 5 years. You can see it in the last 2, 3 days. So it gives you a holistic view to see the trend and for you to be able to monitor the pricing and things like that. So that's very easy to get. Just go to tradingview.com, put in the company's name there, and you'll be able to see it. I think that was the last question.
Yeah, I think that's the last one for you. Thank you. I don't
There's
think there are
another
other...
question.
Okay, please go ahead.
Sorry. Thanks.
I think this question is for Ayokune. It says, if I don't have the time to learn and do fundamental and technical analysis, is it okay to just invest in an ETF like S&P 500, a Nigerian version?
Yeah, I think Olumide answered.
Oh, I think I answered that.
Yes, I think the answer is yes to that question.
Yes, you can. I think Stanbic and a number of other companies do it. But what I would just say is that just be careful, because most times you don't really know how deep they've gone into certain companies, and if those companies are not doing so well or anything happens with them, then it affects the whole fund and your return. But I mean, it's good to take that route, dealing with experts.
Yeah. If I can just add to that, indexing is really good, and ETFs, because literally you're buying a basket, right, of top, maybe the top 10 or top 30. Like for the foreign ones, there's the FTSE 100, so you're buying a bit of the top 100 companies, and so all you need to do is just on a regular basis, maybe monthly or quarterly, just dump some money in there. And the truth is, so long as the stock market keeps going up, that your money will be going up. In fact, I heard Warren Buffett said that if he knew all that he knows today, all he would have done would have just been to invest in the, I think for America, is it the Dow? The Dow, yeah?
Yes, the
Dow Jones,
and
Dow
the
Jones.
30.
Yep.
He
Dow
said
Jones.
if he had put all his money in the
Jones.
Dow and just went to sleep, he would have made more money than he did now picking stocks. Literally, because the Dow just continued going up. The best companies in the world kept doing well, and that money would have just multiplied and multiplied. So sometimes the easier thing to do is actually the smartest thing to do. So indexing is very good. But I don't know whether it's a mature market in Nigeria. But if you want to consider buying stocks abroad, maybe indexing is the way to go. Thank you very much for that. So I want to ask, this is now to the group. Today's meeting was primarily about actionable steps. It's not just to come and hear some people talk about, oh, this is what you can invest in or that. Did you feel like you were able to take a step, the natural next step, from tomorrow or maybe on Monday, for example, on bonds? Do you have enough information now to do that? And okay, absolutely. Thank you. I see you, Itoro. Well done, from the abroad. All right, that's great, because that's really the whole point of these sessions. We should be able to make our money work for us, because this 30 days make one pay, it doesn't work anymore. I mean, anybody in Nigeria will tell you that it's not working. So how about we look for avenues? Like for me, the mutual fund, I had money sitting in GT Bank. I was like, what? How can you be this daft? So I just moved everything. And to be honest, for the past week, I've just been laughing, because every day I open my Stanbic IBT, something has dropped. I say, eh? And I've been sleeping on this. So please, it's very, very important. Like I said, I'll put the recordings on the group. And next time we'll do better to increase the capacity size, the size of this class. I didn't think people would show up like this. This is over 100 people, and people have been bounced. So I'm guessing maybe next time we'll get to either 200 or 500 capacity. So without further ado, I'd like to say thank you to everybody, especially our esteemed experts. Okay, go ahead, Victor.
Before you wrap up, I see a question here from Emmanuel Nobeto.
Okay.
He's saying, I have a Stanbic bank account already. Can I use it for money market too?
Okay, go ahead, please.
So no, you can't. So you have the Stanbic IBTC bank, that's a bank. Then you have the Stanbic IBTC fund managers. So the fund managers are in charge of asset management. So they would open money market account for you, which is different from your bank account. So if you want to kickstart the money market fund, you have to get the form from the Stanbic IBTC for asset management. Although you can access that form from Stanbic IBTC Bank. So you can walk into any Stanbic IBTC bank and tell them you want to open a money market account. They will help you open a money market account, and then you can fund that account and then go ahead from there. So your bank is different from your money market account, just to clarify that. Yeah. Thanks.
Fantastic. Thank you very much for that. So please, I don't want to, this is 8:30. So we've done an hour, 30 minutes. Olumide, I want to hail you specially. After we did all our dry runs, we're running to 2 hours, but you guys did a fantastic job. Well done, guys. And for all the work and the effort you put in. Yes, it's a free job that you've done, but I think it's worth it. So long as people can get something out of it and hopefully be better investors and earn multiple streams of income. That's all we're here for. So thank you everybody for your time. And like I said on the screen, if you can still see my screen, we have other masterclasses coming up in March. For March will be real estate, April, crypto. That's one big one that I'm into. And then intellectual property, creatives, agri, 9-to-5 careers, and then professional services. So please do well to invite other people. If you have enjoyed this session and you think it will be a blessing to others, please do well to invite them to join the Prospective New Kings group. The ad, or what's it called? The QR code is right on the screen. And then you can also just invite them since you're already on the group. Just add people to the group. So thank you again from everybody here and from the New Kings low-cost investment team. Thank you and good night.
Thank you. Good night, everyone. Bye.
Night, everybody.
Thank you.
Thank you.
Thank you, everyone.
Thank you.
Thank you.
All right.